Hi, I'm Seth Freuberg. I'm the Director of Options Trading here at SMBU in Manhattan. I'm also the head trader of SMB Capital's Options Trading Desk. So today I'd like to talk to you about a trader of ours whose nickname is Chili D. It was a nickname he got in college. You ask him, I don't know what it means, but that's his nickname. And Chili D is an accomplished M3 strategy trader. M3 is a strategy that John Locke created, and we teach it here at SMB. And the M3 strategy is comprised of a deep in the money call and a bearish butterfly. So Chili D, who is very good at trading the M3, has recently been running into a problem that we'll get into in a minute. But the purpose of this video is not so much the specifics of what he came up with, which we will get into, but more importantly that he took a strategy that really changed his life. And I've been working with him for many years. He was struggling for a while, and he connected with the M3 strategy, and suddenly he became terrific. And however, even though a trade can be terrific and can be your bread and butter trade, every once in a while you need to tweak it because you've learned more or because market conditions have changed. And in this case, Chili D noticed something that was happening with his trade. He tweaked it and solved the problem. And I'm proud of the idea he came up with, and I'd like to share that with you today. So let's take a look at the M3 strategy, the way it is normally constructed. As you can see, here is an example. If we were to put on an April M3 strategy today, first day of March, you might think about putting on the 1380 butterfly. That would be a Russell 2000 butterfly, top wing 1430, the short strike 1380, and the bottom long wing 1330 with an 1180 deep in the money call. That might be something that a trader would consider doing. Now, if we deconstruct it, however, and we take a look at just the butterfly portion of the trade, you'll see that it's a very negative delta trade. And what normally is the condition that's going to trigger a butterfly position getting filled, and that is a rally during the day. When the market spikes up, when the tick goes strongly positive, that's normally when you will see these butterflies filling. But think about it. Now you've filled the butterfly, now you've got to fill the deep in the money call in order to balance the negative deltas of the butterfly. And at the very moment when the market is rallying, what's happening to the deep in the money call? Well, the price of that is going up. And that means you've got to chase that price and sometimes pay, depending upon the strength of the intraday rally, a lot more than you'd like to pay. So what's effectively happened is your butterfly is depreciating away as the market is rallying. That's why it filled in the first place. Meanwhile, you're still chasing the deep in the money call, and it throws the economics of your trade off because you paid much more for the call than you wanted to. And by the time you get the call on, your trade could be down meaningfully, which means you start out in a hole and you've got to make that up. Now, the time decay that is inherent in market neutral options trading allows you to do that over time, but you'd rather not start out in a hole, and sometimes that hole can be relatively significant. So Chili D got sick of this, basically, and he decided instead of filling a butterfly and then running and chasing the call, he'd rather fill a single position and then have that be the end of it. Once it's filled at a price that he was hoping to get. Now, one thing that needs to be explained here is you may be asking, well, why not just throw the deep in the money call into the complex order of the butterfly in the first place? And the answer is, I don't know any human who's ever been able to fill that. For some reason, that's an unfillable position. And so, but what is fillable is what Chili D came up with, which is very simple. He turned the position into a broken wing butterfly. He rolled the 1430 long put to 1420, and he just didn't buy the call. So if you take a look at what's on the screen here right now, you'll see the call is being negated, and we're instead of buying the 1430 put, Chile D decided in this example to buy the 1420 put, making it a single transaction, and when it gets filled, it's filled, presumably at the price you were looking for, and you don't have to chase that deep in the money call. Now there are other implications which we can't get into today, otherwise the video would go on for an hour, of using this technique versus a deep in the money call and an equidistant butterfly. However, the point is not so much the details and the technicality of the differences, so much as the fact that Chile D had a problem with a strategy he loved. He didn't throw the strategy away. He figured out a way to tweak it. Options trading gives you the ability to tweak your strategies because there's so many different ways of getting the thing done. If you want to be bullish, you can sell a put credit spread. If you want to be bullish, you can also buy a call debit spread. So that's an example of two ways that options give you to be somewhat bullish on a particular stock or a particular index or currency or whatever you're trading. But sometimes there are execution issues with a way that you want to get things accomplished. And so options trading gives you other ways, maybe more fillable approaches than you might have been experiencing with your original concept. And so through some creativity, which only comes with education, you become aware of the different options that are available to you, and then you can tweak your strategy so that an execution problem that you were having gets solved through your creativity. So you don't have to reinvent the wheel. Sometimes something's a great idea, you just have to slightly tweak it to deal with an issue that you have come up with that bothers you because options trading has so many unique ways of getting things done. You can oftentimes come up with a great solution without leaving the essence of the strategy behind. So don't reinvent the wheel. Tweak a great strategy that you've made your own if you find a problem with it, and that's how you can prosper long-term as an options trader. Thanks very much, and we'll see you next week.